call the meeting to order at 9:30, Firefighters Pension Board meeting for April 30th, 2021. You do a roll call.
Brian Hoff,
Yes.
Josh Ingold,
Yes.
Elizabeth Hannon, Richard Schooner, Mark Clapp. Is Richard going to be here? Does anybody know?
I'll check in and see.
Are you looking for Rick Reamer?
No.
Oh, I'm sorry. I'm sorry. I was going to say this is Brian from Rick's office. I'm on here.
Well, we've got 3, so good enough.
Perfect. Yeah, we'll go ahead and start the meeting. We'll go ahead and start with the investment business. Aaron?
All right. Good morning, everyone. Yeah, I sent out the presentation by email yesterday, so hopefully everybody got that. I'm also going to try to share my screen this morning as well, so I'll see if I can get that to work. All right, is everyone able to see the presentation now? Okay. All right, well, we'll jump right into it. Reports laid out in our normal fashion, and as always, as I go through this, you guys definitely feel free to stop me at any point if you have questions along the way. All right, so yeah, we'll get right into it. And I know several of you follow the market pretty closely, and so you're probably not going to be surprised by some of these numbers, but I'll just say things are going to look pretty good in this report, especially on the equity side of the portfolio. So that's where we're starting here with the first bullet point. We note there, as of the end of the quarter, March 31st, the equity portfolio was worth just under $44 million. Now, I did pull up as of this morning, or as of yesterday's close, and that's already up again to about $46,600,000. So you're up another, call it, 3.6 million or so just since the end of the quarter. So the market's really been doing well. We'll have some commentary on that here in a little bit. But yeah, I mean, things are kind of hitting on all cylinders, especially here in the US. And that's really reflected in the performance here. So from a return standpoint, that's about a 6.9% return through the first quarter. And that was nicely ahead of the benchmark as well. We note there that the benchmarks were up about 5.6%. So several of the active managers have been doing well, especially on the value side of the portfolio. This is really kind of a trend we've seen in the markets that really started at the end of last year in the fourth quarter, where we saw a rotation into value stocks, whereas those had been underperforming for the last several years. Now that the economy is expected to reopen, we've seen some of those companies that had been lagging really starting to do well. And specifically what I'm referring to are things like energy stocks. You guys have probably seen the increase in gas prices around town. Oil prices are up higher with the expectation for more demand as the economy reopens. So that's helped that group. We've seen financial stocks do better and industrial stocks do better as well. So those all kind of fall into that value category. And like I said, that's really what's been leading the market here over the past several months. And so not surprisingly, those funds that do have a value tilt, like the Dodge and Cox fund that we note there, had an excellent quarter. So that particular fund was up about 16% just in the first 3 months of the year. So just great performance there. Has a lot of exposure, like I said, to those value stocks, especially the financials. Has a nice overweight there. So really benefited from that. And then the best performing fund was actually the small cap value fund, which is the DFA US targeted value. That was up 25% just in the first 3 months of the year. So again, off to a really great start and really benefited from that rotation.
Hey, Aaron,
On the internet.
I'll
Oh,
just
go ahead.
mention on the DFA stock, I was just looking at for our fiscal year, which is the first 9 months. So from July 1 of 2020 to now, that small stock is up almost 70%.
Wow. Yeah, and I think over the last 12 months, it's approaching 100% return. Now, granted, you got to remember where we were about a year ago. That was right at the height of the pandemic. Markets were at, a low at that point. So we're kind of starting from a low point, but yeah, it has been really one of the quickest recoveries we've ever seen in the market. And you can really, chalk it up to the vaccines coming on board. That was really a game changer, really changed, I think, investors' sentiment about stocks as everybody really started considering reopening the economy. And I think even New York City just announced probably by July 1st, they're going to be fully reopened. So it's looking like summertime things are going to be somewhat back to normal, at least here in the States. Now on the international side, it's the same story. Value stocks are doing better there. So those value strategies, again, the Dodge and Cox International, the DFA emerging markets, both of those had very good quarters, with the Dodge and Cox being up about 7.2% just for the quarter. Now, it's not all great news out there. On the bond side, we've had some negative returns, and I'll get into this in a little bit, but really it's primarily due to interest rates rising here over the last few months, and that put some pressure on bond prices. So the fixed income portfolio was down about 2% for the quarter, just slightly behind its blended benchmark. But again, since inception, it's well ahead, returning about 3.4% versus 2.7% for the index. And we'll show some more detail around that as we get into it. Just looking at the allocation, pretty much right in line. The equity index fund has gotten a little overweight, that Vanguard 500 fund, just by the nature of it kind of outperforming over the last few years. I don't think that's anything really to be too concerned about. Again, it's just in that Vanguard 500, which is a very low cost fund that's done well for you. But relative to the policy, it is a little overweight. But again, I don't think necessarily any action needs to be taken there unless you guys want to do that, then certainly we could accomplish that for you. Now, looking at our commentary, again, I've touched a little bit on this already, so I won't spend a whole lot of time, but definitely stop me if you have any questions. Like I said, the vaccines were really what kind of sparked this rally. And you can trace it back to November of last year. That was when we got the first reading on that Pfizer vaccine and just how effective it was going to be. If you add on to that the additional stimulus plans we've had, we mentioned there that we got that 1.9 trillion relief package. Again, that just kind of juiced the market as well. And we're seeing that translate into some really strong economic readings. We've gotten some this week. Consumer spending is really strong. You guys have probably seen the news around the housing markets or just kind of seen what's going on in that market. So housing sales are very strong. And the job market appears to be improving as well. We're seeing jobless claims fall and that unemployment rate trickling down. Now, granted, it's still elevated, I think around 6%, but if you look out there, there's plenty of job openings. So essentially right now, anybody that wants to get a job, there's a job for you out there. But you also have some of those enhanced unemployment benefits that are impacting that a little bit. So I think that's keeping the unemployment rate a little elevated from maybe where it should be. But those are going to expire later this year, and I think that's going to change things pretty dramatically. The second bullet point touches on that shift that I already mentioned to value stocks starting to do better. So we highlight there the S&P value index was up about 11% for the quarter. The growth market only returned about 2%. Now looking forward, big talk of this infrastructure bill. That's kind of the next focus for Washington that may impact the economy. And I would kind of classify that as a little bit of a mixed bag. And the reason I say that is the spending would be good for the economy and corporate profits, but that may be offset by some tax increases. There's been some proposals out there to raise capital gains tax, but probably more importantly, there's been some talk of raising the corporate tax rate as well. And so that could weigh on the market a little bit if that does actually get to the finish line. But again, we'll just have to take a wait and see approach on that. Still a long ways to go before that bill actually gets passed. So it's going to probably be talked a lot about over the upcoming months. On the international side, again, returns were good there, but not quite as good as ours. And again, you can really trace this to the vaccine situation. Has not been rolled out as extensively internationally. And so they're very much still battling the pandemic, which has weighed on their markets a little bit. Again, you've probably seen the news coming out of places like India and Brazil, where cases are still very high, which is, again, quite a bit different than what we're experiencing here in the States. So we think eventually, that will resolve itself as the vaccines do get rolled out there. But it's certainly taken a little longer than it has here. And so those markets have just lagged ours a little bit. And then finally, the bond market, I talked a little bit about that already too, but we note there specifically talking about rates rising. If you just look at the 10-year Treasury bond, that went from about 0.9% at the end of the year to 1.7% by the end of the quarter. So almost a doubling in interest rates there. So that's a pretty quick move for the bond market. And again, that weighed on bond prices a little bit. That is probably something we expect to continue. Inflation readings are probably going to be a little higher here as we head into the later part of the year. Also with the economy reopening, the Fed may eventually start to ease some of their programs that they put in place to lower interest rates. And so we're expecting those rates to kind of just continue to trickle higher. We're not expecting a spike in interest rates, but it's going to probably continue to weigh on the bond market. So just kind of be prepared for that. That those really good returns we've had from bonds over the last few years are probably set to cool off a little bit as, like I said, interest rates start to reverse course from what they've been doing really over the last several decades. It's been quite a time for bonds with those falling interest rates that we've had. All right, maybe I'll pause there. That's kind of the end of the commentary. See if we got any questions so far. All right. If not, this gets into the specifics of the portfolio. This is where I pulled a lot of those numbers, those first few bullet points. So again, you can see where we're at year to date. The last 12 months, as we kind of talked about before, looks just unbelievably good. Over the last 12 months, the portfolio is up about 62.5%, or almost about 17.5 million that it's appreciated. But again, that was due to that big sell-off and rebound we've had. And so we're just really kind of measuring from a low point in the market 12 months ago. But even that said, you look at the 3 and 5 year and 10 year even, you're still well into double-digit returns. And then since inception, that drops down a little bit to about 8.6% per year that the portfolio's returned. And you've now made over $40 million from the investment. So again, just a tremendous run here. And again, your portfolio's really benefited from that tremendously. Kind of the same information here, but here you can see what the total return has been. So again, that 8.6 per year works out to a total return of about 560% or so. If you look at that graph here in the upper right. Looking from an allocation standpoint, mostly U.S. equities, about 86%. We've been boosting the international a little bit over the years, as we've talked about, and that's sitting around 14% or so that you have in international equities. But pretty much the portfolio is going to be dependent on what the U.S. market does. That's going to drive the majority of the risk and return that you experience. Here we can see the relative performance. And again, things look good on a relative basis as well. So I mentioned already, year to date, you're up about 6.9% versus a segment blended benchmark of about 5.6%. Most of that did come from the U.S. equity performance, where we saw some nice outperformance relative to the S&P 500 index. And that's the same over the last 12 months as well. And then if you look longer term, pretty much right in line with the benchmark. Over the life of the account, you're ahead by about 0.7% over that time, or about 70 basis points of outperformance from those active managers. Here's just a risk return plot. The portfolio plots very nicely. That's the square here in the upper right. And if you look down here, right below it is the S&P 500 index. So essentially what this graph tells you is the portfolios experience the same amount of volatility as the S&P 500 index, but it's had more return. So again, on a risk-adjusted basis, portfolio is performing quite well also. So again, just kind of reaffirming how well some of those funds have done for you. Just an allocation drift chart, again, pretty consistent throughout time. You can see back here we had some cash infusions, I believe, but otherwise it's been fairly consistent throughout time. But you can see the international exposure. We've added to that, like I said, a little bit over the last few years to try to diversify you a little more, get you a little more exposure to those international markets. Here's all the actual funds in the portfolio. So you can see the cost basis, market value, unrealized gain loss, and projected income for the funds. All right, now we're going to get into the fixed income portfolio. So like I said, unfortunately, that was down a little bit for the year, down about 2%. But over the last 12 months, you're still sitting on a very healthy gain of about 8% for the portfolio, or about $345,000 that you made. And again, nice returns over most time periods. And since inception, this portfolio is up about 3.4% per year. Here's the total return chart. Here's the relative performance. So you lag the benchmark a little bit. Again, just a reminder, this is an all corporate bond portfolio, so it's all bonds issued by corporations. The index we have here is a little broader than that. It includes corporate bonds and government bonds. So we have seen those corporate bonds underperform a little bit, but again, you've been rewarded for taking that extra risk over really all the time periods, and that's why it appears so favorably relative to that index over time, as those corporate bonds do pay a little more interest, but they also experience a little more volatility as well. They're a little riskier. Here's that efficiency chart. Again, plots out right where we'd expect it, right in line with the bond indices. And here's all the holdings, if you guys want to see those. Again, not too much to highlight there. This is a nice piece of information, I think, if you guys really want to know what's going on here. This provides all the bonds, what their coupon rate is, when they mature, what the rating is, and then really the number to focus on to see what you're really earning from this bond is that yield to maturity or the yield to call. That really reflects the true expected return of that particular bond. And another important number to look at, and again, this is getting into the weeds a little bit, but this number here, the modified duration, that really tells you how much interest rate risk you're taking. So a higher number means you have more sensitivity to interest rate movements, and what causes that is the length of maturity of your bonds. So if you have longer maturity bonds, those are going to be more sensitive to interest rate movements. And if you look at our portfolio, it's about 4.4. So in other words, that means about the average maturity of the portfolio is about 4.5 years. And the way to interpret that number is if interest rates were to rise 1% across the board, the bond portfolio would actually lose about 4.4% in value. On the flip side, if interest rates fall 1%, you're going to gain 4.4% in value. So again, you can see directly how that relates to interest rate sensitivity. And it's just a good number to kind of be aware of. And it's something we monitor pretty closely. And we do keep that fairly short to minimize the interest rate risk of the portfolio. Here's just a maturity distribution. Again, mostly tilted towards the shorter dated bonds of about 1 to 5 years. Again, here you can see all the ratings. And that's really it for the report. Final page here is just kind of a summary. This is something we provided historically. Shows you all the funds, what they returned for the quarter in the last 12 months. We throw on some benchmarks here, and so you can see that for each category. And then after that, it's really just a Morningstar report for each and every fund. So again, we just kind of put this in there for reference. I don't think we need to go through each one of these, but by any means, if you guys have any questions about any of the funds or any of the portfolio, happy to take those now if you would like.
Aaron.
Aaron, go ahead, Brian.
Yeah.
I just have one question for you. How does our portfolio look, obviously with the transition? And I was going to talk with you too a little bit more about the transition plan. I don't know if you've received the FEIF's transition plan date and all that information.
I have not, no. Okay. So unfortunately, I haven't seen that yet.
So I can share, I'm going to try to share, bear with me because I'm not really tech savvy here, is sharing the screen. If now's a good time to do that. Is this a good time for everybody? Oh, hey, Richard. I see Richard's in me. All right. I'm going to try to figure this out. I'm doing it off. Does that work? Sorry.
No, I'm not seeing anything yet.
Okay. I can't get back to it. You guys able to see now?
Yeah.
Okay, so this is the FEIF's transition. They've at least their notification of what their intent is with the transition of the funds. I'm going to kind of go to the timeline and then I'll work back because I thought this was easiest to see. Sorry. Let me for 1 second there. Everybody see that? Is that coming through, Aaron? Okay.
I can see it. I see the timeline.
Right. Okay. So there we go. They've selected a custodian. The Board of Trustees selected Northern Trust to serve as the custodian this March. And then they also selected a transition management bench. And they've done an RFP for the investment side. And I think that was, that they were reviewing 5 transition managements in the RFP. I'm trying to see if they selected one. Anyway, as far as the implementation, it looks like the final transition dates are looking to be from October through December there. And so I guess my question would be is, and again, looks like the way they've kind of got 2 plans for 2 options of phasing this transition to occur. To my knowledge, they have not selected one yet. If I'm mistaken on that, I'm sure Brian might be able to add or correct me, unless they've selected. He's probably seen a couple of these meetings to this point. But so far, they're kind of just still in the plan phase, to my understanding, as far as the transition options go. Again, if I'm misspeaking, please, by any means, anyone step in to correct me.
No, I this is Brian. I think you're correct on that. I don't think I know they want to do it in 3 waves, but I don't know that they've really nailed down how and when exactly they're doing it per fund. So we're kind of in limbo on that.
Okay. And so Aaron, I just wanted to share this with you, and I'll share this email. The FPIF actually has all of this on their website. And I just get links emailed directly to me as far as this stuff goes. And I think Elizabeth brought that up last meeting as well, is that if you guys want to get put on that list, you can. But I was trying to figure out, as far as, our transition and how this will affect us, if there's a way you guys can kind of give us some insight to what we're looking at and how this will affect us and what we can expect to see, especially with some of our coupons. And obviously they're broken out over a period of time of you holding them. And so we're going to be doing the transition. And so I wasn't sure how that would affect us.
Hey, Brian,
Yes.
I want to ask you, from what I read, unless they've changed it very recently, their thought process was that we would just transfer to them all of our assets, and whether it be at one time or in phased or whatever, however, but eventually we would just be transferring in the form that we have them over to them. And then that would be their responsibility to sell them, add them in, do whatever they want to do with them. If that's the case, then that's pretty simple for us. We don't really have to do very much at all, except that when they ask for them, we have to give them to them. Is that your understanding?
Ron, that is my understanding currently. They have not come out with their, finalized plan, but that would be the goal going forward, because, we've got funds that have a lot of, annuities, and we don't anticipate them requiring you to liquidate them, because obviously that would be a huge financial hit. So as far as we know right now, they're going to do an in-kind transfer, basically saying, give us all you got, and we're going to go from there.
Okay.
Yeah, and I would say, as far as your guys' portfolio, it's all pretty straightforward stuff. It's mutual funds and individual bonds. So I see no reason why somebody like Northern Trust wouldn't be able to receive those. And so, yeah, what you guys just said, it should be pretty straightforward, that we would just transfer everything in kind, and yeah, shouldn't really have to do too much.
Okay, well, thank you. I just was curious to how that was going to play out. I know that there was some talk of that, and I wasn't sure if there was any information passed to you guys already at this point. So,
yeah, if you don't mind though, please send me those links, and yeah, we'll check those out as well, just to make sure we're not missing anything. And yeah, I know some other folks at Busey would like to see that information as well.
okay. Thank you.
Okay. Yeah, thank you.
Either Ron or Brian, are you saying then, even though we're transferring this over to trust, big deal, they got it, are they still going to eventually liquidate everything and we could take losses because of them? Are they going to try to hold that portfolio active and just continue to play our portfolio with everybody else's portfolio? That's going to be kind of a mess.
Mark, quite frankly, we don't know, because they are still in the process of figuring out all their administrative rules and regs and all that kind of stuff, and how they're going to do it. But I would think, from a financial standpoint, and they need to make sure that your fund is secure and not hit by it. So I would anticipate, just from my perspective alone, that they would continue to hold the assets that you have in the same, sort of capacity that they're doing now, so that you don't take a hit, because these funds are segregated and what you go in with is what you go forward with. So as far as you guys are concerned, like I would continue having Aaron invest the way he's been doing, because he's been doing a great job. But unfortunately, until they come out with some more rules, we just don't know. So just do whatever you can to maximize what you have going in, so that going forward, you have that all available for you.
I think that was concern was too, is if we started making moves now and we didn't know how the asset transition was going to occur, I think that was some of our concern, because obviously this is a long haul game, and if we're making long haul moves into this short time period with the non-definitive date or an exchange process, I think that was some of our concern.
Yeah, and that's why we've advised, because especially with funds that have a lot of annuities where there's big financial hits for liquidating, we've just been saying go forward, business as usual, if this transition's not going to happen, because quite frankly, like we don't have an attorney's agenda listed on here, but there was a lawsuit that was filed on this. So there is a possibility that this might not go through. I mean, there's another possibility it will go, but just keep doing what you're doing until we know more.
Our fund is probably going to be one of the easiest for them to transition into. I mean, all we've got is cash, and we got more cash now than we've ever held, and because of that reason, and we got corporate bonds, some CDs, and these mutual funds, of all of which are straightforward. They all have marketable values. So I mean, they're not going to see any crazy or goofy stuff coming over from us. So. But that doesn't mean, they're hiring Northern obviously to manage that portfolio of all of these funds. And if it makes sense to them to sell some things and buy some other things, I mean, they're probably going to do that. And I would kind of hope that they would do that. That's the purpose. Otherwise, it's sort of silly if they can't gain some more return from being the size of all of these monies.
I guess that's where I was concerned. It's like, even if they take possession, it doesn't matter then, because they're just managing our portfolio, which we were doing anyway. So why did they take it? So here's a game in the back door that somebody's going to sell all this out to make this one big bucket out of 1,800 little buckets. That's the only way to solve that problem. What they're trying to say, take advantage of, is the accumulation effect of the compounding component. But it's like, then why are we doing it? So that's why I really don't want to lose a hell of a lot of money to some of these guys that, again, politics. But we'll have to play the game and we'll see where it ends up. We're doing good. I just don't want to lose that because somebody else wants to cycle something and pick some bad fun. So, yep, game is a game.
Can't agree with you more, man.
What's up, Hoff?
Okay. Any other questions for Aaron? Thank you for the report as always, and thank you for the information. I'll get this stuff over to you so you can kind of see that, and then if there's any suggestions you have for us, come next meeting, as far as all of what we've already talked about here. Anybody else have anything for Aaron?
Hey, Aaron, I was going to ask, those charts over your back there on the wall, are those investing charts? And can you email those to everybody?
No, I'm working at home today, and that's my daughter's artwork on the wall. So
it looks pretty,
okay.
It looks pretty talented.
She's 9, and she loves to draw and paint. So we put it up there.
It's okay. You can accept them as yours. It's okay. You don't have to blame the daughter or anything.
All right.
Well,
Guys. Well,
appreciate it.
Yeah, absolutely. It was a pleasure as always. And you guys have a great Friday and have a great weekend.
Thanks.
All right. Take care.
I'll make a motion to receive and file the first BC quarterly report.
I'll second that. Hoff?
Okay, roll call. Hoff,
Yes.
Ingold,
Yes.
Clapp,
Yes.
and Schooner.
Richard.
Richard, okay.
Okay, any public input? Oh, I'm sorry, I skipped the approval of the quarterly financial report and pension benefit changes. That'd be Ron.
Okay, I sent that out to everybody a few days ago, and I'm not gonna go through the whole thing, but I'm gonna read a few points from that cover letter. Everything is fine, and we're in compliance with all the state laws and all of our policies, except that our equity investments, due to the run up that Aaron just talked about, they've grown to 71% of our portfolio now, where the market, the law says 65%. But they have not been following up on those when it's grown because of the run up in the market. So I'm not really concerned about it. We normally look and kind of rebalance. We have rebalanced at the end of our fiscal year, which is the quarter coming up here at the end of June. So we'll look at it again. If it's continuing to get out of sync, maybe we would. But with them taking all of our assets here, supposedly in the next 6 months, it's sort of a moot point, really. Fixed assets on the quarter, and this is for the period of January of 21 through the end of March 21. We had 2 CDs matured, and I've not been reinvesting those, just leaving those in cash. The rates are so small. There were no purchases on any of our U.S. governments or sales in the quarter. And the corporate bonds, you see, the 7 bonds matured or were sold, and 5 were purchased for a slight increase there. And our equity, as Aaron said, our equity returns for these 9 months is just crazy. I mean, it's just really crazy. I had to really do a double check to recalculate all my numbers to make sure that, that I didn't have an error. But they're up 33% in total. For the first 9 months of our fiscal year, they were up 24%, but at the end of 6 months, and at the first quarter, they were up 8.1%. So they've gone from 8.1, then they went up a total of 24. Now they've gone up to a total of 33%. So they are really they're just going on steroids. We did have unusual receipts of payments. We did at the end of December. We always receive a lot of mutual fund dividends in the form of cash, and we received about $300,000 of those. So that's a little bit unusual. And the benefits, we had a number of changes in our benefits in the last quarter. Phil Phelps passed away in February, and he has a dependent spouse, so that switched over. Dependent pensioner Nancy Swaney, she passed away in March. So she has dropped off. Oh, look at here. Believe it or not, Mark Clapper reached 55, and he got his increase in February. Rod Eichhorn reached 55, and he got his increase in March. And then we had the annual 3% increases, cost of living increases that we paid to those people in January. And for next quarter, for this month, April, May, and June, I know of no planned changes in benefits from anyone coming up. So I'll try to answer any questions if you have it.
Hey, Ron, I do have one question for you, and I'll ask it, and Brian might be able to weigh in too. As far as tier 2, and this was Josh and I have had several questions in regards to some of the tier 2 changes in their benefits. And one of the questions that we've been getting a lot of is they only take the penalty if they choose to leave before age 55, correct? They can still leave. However, if they choose to elect to receive the benefit, then they would take the penalty. Is that correct?
That would be correct.
Okay.
And I'd have to look at the exact specifics, but yeah, there's a penalty for leaving early. And then
Okay. So is it early, or is it leaving and attempting to draw early? So that
Oh God, I haven't looked at this for a while. I believe
Sorry, that's been the question that's come up several times now is to our understanding, as long as there was no claimants to draw, before age 55, there's only the penalty would be accrued. So say a guy, had worked, he was age 53, he wanted to retire, but he did not make the claim to benefit until he attained age 55. Um, was there a penalty or non-penalty?
Hoff, you know what, can I actually just like research that and send you an email? Because I don't know exactly, because there's been so many changes with tier 2 lately.
That'd be great.
Obviously with
We've
the,
been for an update to see, and I don't, and maybe I'll just ask this while you're sending that, is we had got a summary established, that was kind of reviewed a while back. I can't remember whose office reviewed it, but they kind of put out a blurb, like a summary of the tier 2 changes when they first came into effect, of the major changes, and they kind of interpreted the law, got it approved, and kind of people were using that as a summary. And I don't know if you've come across one with the most recent changes, but that would be extremely helpful if you have anything on that.
absolutely. And I'll put that in here as a follow-up item, because I don't want to give you bad advice, and I don't want to tell you off, like, because I believe I did see that, but I want to make sure for myself before I tell you the exact answer.
Okay,
But so I'll shoot you an email, okay?
awesome. That'd be greatly appreciated.
No problem.
I think that's all I had. Does anybody else have any questions for Ron? I'll make a motion to accept the financial report.
I'll second that.
Hoff,
Yes.
Ingold,
Yes.
Clap,
Yes.
and Schooner.
Yes. All right, moving on to public input. Is there any public input at this time?
There was not, but Brian, we need to approve the minutes from the last meeting. We
Oh,
skipped that. And then Carla found a typo, so you're going to be approving the minutes with Carla's correction.
Got it. Thank you. Man, I screwed this up several times. All right, so anybody like to make a motion on the approval of the minutes with the typo correction? Thank you, Carla.
I'll make a motion to approve the previous meeting minutes from January 29th of 21 with correct.
I'll second that.
Roll call, Hoff,
Yes.
Ingold,
Yes.
Clap. I'm sorry, Clap, did you say yes?
Oh, yes.
Okay, thank you. And Richard Schooner,
Yes.
thank you.
All right. Now, before I screw this up, are we on unfinished business? Is that correct?
Yes.
Okay, perfect. Ron, I think we left this open and just kept it on the agenda, the investing of the cash. We said we were just going to keep the cash on hand. What are your thoughts on, especially after our conversation today? And because they came to us last meeting and they had made some recommendations as far as where to put some of those extra funds.
Yeah, you know, the problem I saw was that the cash that the managers were holding in their accounts was paying so low. It was like 1/100th of 1%. Now, Busey Bank and their basic savings account that we have was still paying low, but it was 9/100ths of 1%. So it was really 9 times, but the amounts are so small that it's hard to get a hand on the percent. So we moved some money out of Morgan Stanley, which was paying 1/100th of 1%, and they had built up quite a bit, $1.5 million or so from maturities and things. We moved that over to our savings account at Busey Bank. So we still have money in Edward Jones, and you'll see on the agenda, Elizabeth and I were talking about moving that out of Edward Jones over to our Busey savings account as well. And then they said, well, we don't have a current resolution on file, and would you please have the board approve that? So that, if you see, that's on the agenda to do that. And once we do that, I would draw that money out of there as well. And it, not to make any changes in investment, but simply to leave it at Busey Bank, which is paying more interest rate, considerably more than at the money markets. With the state getting ready to take our assets or transition, and the fact that we are already at 71% on our equity investments, I don't think I would recommend buying any more equities right now. We could buy some corporate bonds or CDs, but the rate, or governments, but the rate on those are so small. I mean, they're below 1%. So that really, you're not gaining much money by going through a lot of hassle buying and selling. And at this point, I think we're probably the best bet is just to leave it in our savings account and see what happens later here in the fall.
Okay, sounds good. Anyone else? Move on to new business. Do we have to do any acceptance of the unfinished, or we move right to new business?
If you're not making any changes, you're good to go. Move forward.
Okay, perfect. All right, so just the new business, I touched on it lightly with the FPIF update. As far as the updates go, I will try to email those out to you guys. Also, if we can just make it a regular agenda item. I think I talked with April about this, of just making it a regular item on the agenda to be on every agenda, just because it looks like they're gonna be putting things out regularly, timed with our meetings. So I'm sure we'll have a lot more come next meeting. So I will send out the overview and the transition plan. I know I scanned over it briefly. So the two phases, and that's, I guess, what caused some confusion for me, was one being the bulk transition, and it looked like it was like for like and all on a single transfer date. The phase two approach of the option was transitioning the assets by class or by group, and then also by fund or department. So that's and they've also assessed a risk with doing that, the benefits, and then the cost impact. So they've kind of done a risk analysis. So obviously they're calculating for some risk to this. So I didn't know the like for like how it would work without the cost impact. So but I'll email that to all of you guys as well, so that you can look at the same thing.
Hey Brian, I had a question on that transition plan. It has to do with the cash and paying the benefits. I was concerned. They talked about doing a budget and getting enough cash to last for a long period of time so they could have their cash and invest it. But sometimes that's a little hard to do. We have people leave, and sometimes some of these people have left and withdrawn their contributions in a pretty good considerable amounts. If they've been here a while, maybe they're going somewhere else, or they're going to roll it over to another plan or something like that. So but from what I read, it sounded like it was you were going to be able to get your money or new money out of your account there at the state in a fairly reasonable short time frame. Is that your recollection of it as well?
That is my recollection of it. They're going to allow you to keep a certain amount of cash on hand in your local bank. Again, that's a rule that they have not really formalized, but I would guess for efficiency purposes, they'd probably allow you to keep 3 months of benefit payments minimum, because otherwise you're just going to be going back and forth to them all the time asking for cash. And obviously there's money that's tied up in that. So I do believe that is their plan. Exactly how much to let you keep, I don't know yet, but that is something that they are working on.
Okay.
All right, Thank you. Let's see. The second one would be, okay, so that's back to me. I put this in there for the creating of new positions. And Brian, this question is going to be for you guys. Dobie gave me an inference for the deputy chief position that was created. And according to the job description, he kind of felt that, yes, this fell under the fund. They're talking about creating the potential of another new position. And so now I'm trying to get an official view of this. I know, DOI used to make recommendations as far as this went and how they fell under the fund. And, is there anything that we have hard fast that says, yeah, this would qualify to come within the fund? And how do we accept that? Even as far as the deputy chief position, it actually went to an outside candidate from a different department, who I think you'll see on the agenda has actually done a reciprocity request. So they'll be coming under our fund, and they're a carryover, they're a tier 1 carryover. So I guess the question is how do we really know that it's a position that's under the fund? And when it comes to a new position, how does that all work?
Really, we at the end of the day, I know Dobie looked at this and gave a little guidance about it's really based on the job description and whether the person is actually engaged in active duties as a firefighter. Because we've got admin people on some departments that really have no responsibility to respond to any sort of situation. So it's even if they're just directing at the scene of fire, they're generally considered a firefighter and not and would be subject to the pension system.
Okay.
So is this a situation where you'd want us to look at the job description again for this new deputy chief?
Yeah, that would be, and that was the thing is I'm trying to get with the city before a position's created to understand and, kind of understand the role. Same thing that we had with the deputy chief position that we previously had posted. I had sent that job description to Dobie. He kind of went through and his interpretation was that it would fall under the fund. And so sorry.
Hey, Brian, I was going to add, does he have any responsibilities for supervising firefighters?
Well, that's a good, that is under the job description. That's, I think, what we're trying to determine. So
Brian, I think the best course of action, depending on whether this person wants to be in the fund or not, would be to send us the job description so we could review it and make recommendations. Because not seeing it, I don't know exactly, and IDOI's got their various opinions. So just you could shoot it to me directly. I think you've got my email, and if not, I'll send you an email just so you can send me stuff.
Okay, that'd be great.
All right.
That'd be fantastic. So that was my question for this is, if we accept someone into the fund under the interpretation, but IDOI later rejects it and they're like, yeah, this we don't feel this position, is validated. How does that look for us?
Well, quite honestly, it's more likely that they would accept the person than reject them.
Okay.
That's usually how that usually shakes out. Yeah, and then obviously they'd have to pay their contributions, because otherwise they're going to have to get, hooked up with the city and figure out, because, whether they're going to be an IMRF or everything like that. So just before they even post any job descriptions or anything, just send it to us.
Yeah, and that's I've actually inquired with the chief on the last position, and I actually did that through the union on the. I just heard rumor of this new position, so I don't even know if the position's reached actualization or anything like that. And so that's kind of, you know, what I was trying to figure out is before it actually gets, you know, golden stamped is what the intent of the position is, I guess, too. So.
Right, yeah, because if it's just purely administrative and they're just, you know, there are some departments that have that where they're just pushing paper and they're not required by their job description to respond, then they're usually outside of the Article 4 pension. But it really depends on how it ends up being written at the end of the day.
Okay, thank you very much.
Problem.
I think that is it for me. Josh, new hire, Kent Demonde, hire date was 3/9/2021.
Yeah, so obviously we got his hire date. I do want it to be on the minutes that he's a tier 1. And also we've got all the required paperwork. He's had his physical and we got it back passed. So that's where we're with that.
Okay. Do we need to make a motion to accept and file Demonde into the fund?
Yeah, I'll make a motion to accept Demonde in as a tier 1 into the pension fund.
Now, hey, Brian, whatever, that's the person we're talking about, whether they're eligible or not, right? Or one of the persons.
Well, yeah, and that's my question. So if
Brian, is he supposed to be classified as a safety officer, anybody dealing with fire on the ground? That's that description of.
or in the original job description that I sent Dobie, it was under his interpretation that position in general, because I asked for an early interpretation because we had internal members applying for that job position. And so we wanted to get that. So all I wanted to ensure was that was still good interpretation before, and that's why I was asking Brian. So Dobie's original opinion was that it did fall within the fund on that position. So I think as far as their review, you know, we do have the belief that this position is responsive to fires in nature, and so the job description falls. So I just wanted to ensure that original interpretation was good enough to validate it for this, because that was prior to the position being awarded. So that was just merely so that we could let people know that we're interested in the position, that yes, we believed it fell under the fund, because that also, you know, was a determining factor whether they applied for it or not. So we may run into the same exact issue with the other position if there is another position created. So.
Right. Thank you.
Yep. So Brian, does that sound about right? Because
yeah, I'm going to defer. I know Joby reviewed it, and I know other people in the office reviewed it. So I am going to defer to that interpretation as far as this particular job description goes. Okay. And then it'll just be a wait and see if they do create an additional position for the next person.
Okay. Okay, so we had a motion. Did anybody second? Or do we want to hold on the second until we get a further interpretation, or is everybody good with? Okay. You're muted, Clap.
Working in an office. Yeah, I think Richard seconded.
Okay, Richard second. Thank you, Richard.
Okay, roll call. Hoff,
Yes.
Ingold,
Yes.
Clap,
Yes.
and Schooner. Richard.
Yes.
Okay.
Okay, and Josh, you already covered the reciprocity request, or no?
No, not yet. So I've received an official letter, and I think I sent it to at least Elizabeth and Ron. But I've got his official letter that he'd like to claim reciprocity. So
We've not, Josh, we haven't gotten a letter from, I forget what the other fund is where he was at, but that would be the next thing, to get a letter from them with all the particulars. We have not received that, I presume.
Correct. Yeah, I have not received anything from his previous fund as of yet. So I'll be looking for that.
So we'll put that on unfinished business before we make any action on the reciprocity request.
Well, I can say that his extra additional 1% is already being taken out.
Yep. So he started that already. So do we need to make a motion then to just accept the reciprocity upon completion of the paperwork?
Well, I'm not sure what we're going to be accepting without knowing. I mean, he's given us some information, but really, that's all it is he's given it to us. It really hasn't been confirmed by the other fund or anything.
Okay.
So, I mean, it's pretty pro forma. It's going to occur, but really, without the dates and all that information, I'm not sure what we would be approving.
Okay.
I'd hold
Oh.
off.
Yeah, I'd hold off. I'll put it on the agenda for the next meeting.
All right. Perfect. Then we moving on to the next item, death of Nancy Sweeney. Josh.
It was March 25th, and we've got all the required paperwork. Her family as well. So.
Okay, perfect. And then the retiree elections. Results.
Yeah. So congratulations to Mark Clapp on working another term as a retiree trustee. So he ran unopposed. So he won by acclamation.
Is that a 3-year term then? So his expiration date would be 3 years in the future?
I believe so, yes. So it would be April 30th of 2024.
Yep. Okay.
I'll make a
And-
motion to accept the election results.
I'll make a
Mark.
motion to accept the retiree election results.
I'll second.
Hoff,
Yes.
Ingold,
Yes.
does Clapp get to vote? I'm not sure.
Abstain.
Okay.
Yeah.
Richard,
Yes.
okay, thank you.
All right. Last thing on the agenda is the corporate resolution from Edward Jones. I think that's under you, Ron.
Yeah, I don't know. There's not much to explain. I mean, that we want to take any money out at all from Edward Jones, and now they say we need this resolution. It's the old one that we had was out of date. So that's kind of funny because we changed investment advisors. The office we had before, they transferred money to our UC accounts all the time without any problem. So this is just a new person and somebody else looking at it. So yeah, I'd recommend to approve that resolution.
Okay. I'd like to make a motion to approve the corporate resolution for the Edward Jones.
I'll second that.
Hoff,
Yes.
Ingold,
Yes.
Clapp,
Yes.
Schooner.
Yes.
I just will mention that, to move the money out of there and a wire transfer to our Busey account, they require other written documents as well. They require the written signature from 2 people, and they can only go to our Busey accounts. And Elizabeth is usually one of them, and I think probably Brian or Josh is the other one that we normally get the signatures on. So there's more to it than just this simple resolution.
Hey, Ron, it's Brian. Can I jump in? Did they I know they tried to fax something to Elizabeth. Did anything ever come through? Because Dobie just sent this to me last night and was like, yeah, I don't know what this is about. So is there any written authorization that you guys received to sign off on at this point?
Yeah, I think it did end up getting to Elizabeth, and she got it.
Oh,
for us to all sign, and I saw it was on the agenda, so I waited to sign it and to disperse it to else.
Yeah. All right. Very good. Yeah. I got it in the middle of another pension board meeting last night. I was like, I haven't seen this, but yeah, if you guys can go ahead and take care of that and move the money, that'd be great.
Perfect. Okay, next quarterly meeting, scheduled for Friday, July 30th, 2021. Everybody good with that?
Yeah. And Brian, I'm going to look into that tier 2 penalty issue, and
Okay.
I'll shoot you an email. Okay.
That'd be great. And I'll try to get a job description. I'll try to find out if there is talk of a new position.
Okay.
Created, and if so, what it's entailing, and get that over to you for an opinion.
All right. Very good.
Okay, thanks so much. I'd like to make a motion to adjourn April meeting.
I'll second.
Okay, Hoff,
Yes.
Ingold,
Yes.
Clap,
Yes.
Schooner.
Yes. Have a good day. All right, everyone. Take care.